Hey, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to our Monday session. Boy, we are winding down the month of April, just 2 days left, and lots of things are going on. We're going to talk about our Delta neutral trade that we did last week, and then we'll cover some headlines. We'll do a U.S. market update, take a look ahead at what's coming up this week, and then we will pick a stock to watch this week. So that's the kind of the rundown of the next few minutes. So let's jump right into it and talk about our trade from last week. Tesla, boy, they've been in the news, and not including today. Okay, so last week we had earnings, and we put this little strangle on Tesla, and the stock went through earnings, gapped up, very nice trade, and then this chart is representing staying in this trade through expiration on Friday and closing out at the end of the trading day on Friday, and a really nice winner of over 100%, 100% winner in just a few days. Really, we put it on Monday, so in a 5-day span, you doubled your money on Tesla. And that doesn't include today. If we had done a little longer trade and carried it through this week, wow! I double checked, and you'd be up about $3,000, almost $4,000 on this right now. Had we extended a week, but that's not really how we trade these. We trade them just beyond the earnings date, and we typically exit on the move. With Tesla, I was anticipating a little follow through, and sure enough, we got it on Thursday, and then Friday we were giving up a little bit, so we went ahead and closed it out. But the very nice trade on Tesla with over a $1,200 profit. That was double our money on Tesla. So let's move into what we got going on this week. And before I do that, if you want to learn more about how to trade strategies like these, I want to encourage you to download our free guide on trading these breakout type of trades. This document is a free little ebook that you can download at ewotrader.com/straddle. And it's there for you to really, this is a really basic strategy. It's easy to do, but a lot of people misapply it, and they don't do it on the right stock, on the right security, and they run into trouble, and then they give up on it. All right. So we want to help you out with this, and show you how we trade through this little strategy, both straddles and strangles through earnings season. So download that free guide today. So let's jump into the headlines for this week. And speaking of Tesla, they're going to lead us off here. What a watershed moment for Elon Musk as he travels to China, and they reach a deal with a mapping deal with the self-driving automation. In fact, the same technology that the National Transportation Safety Administration just filed a suit against Tesla on Friday, and yet China here on Monday says yes, let's move forward. And so yeah, that's how things go. But boy, the stock is up big today, up over 15% on non-earnings related news. The market just looked at this as a real positive in reaching that agreement, and some potentially good things to come from that deal. And on to the economy a little bit. Some key inflation measures came in. A key inflation measure last week came in at 2.8% from March versus a year ago. This was more than expected. This showed that inflation is not going away, and this is going to make things very tough for the Fed. And I have been, in our weekly insiders meeting that we do every week, I've been saying since January that we wouldn't get any type of significant rate cuts until maybe June at the earliest, and now I've taken that off the table. I don't think we'll be getting any probably this year, be very surprised if we do at this point, given as we approach the election. Um, uh, Typically, they don't want to interfere with the election as they are independent for right now. And so we'll see. But the Fed is in a little difficult position as inflation continues to rise, and other factors in the economy show, hey, things are still moving right along. And then interesting comments yesterday from the World Economic Forum. The WEF president, Borge Brende, says we haven't seen this kind of debt since the Napoleonic Wars, since the early 1800s, and warns of a global crisis. And this speaks to the unbelievable spending that not only the U.S. government continues to do, but other governments around the world, as they just spend like there's no tomorrow. All right, that's a very popular move, is to spend, but it's irresponsible, and soon we will be paying the piper. We'll see how that turns out. And let's get on back to here in the U.S. and focus on U.S. markets. The last update here is we have earnings continue in full stride this week. We have over 950 companies declaring earnings. So it's a very busy week, and some big names, potential market movers, all to come this week. So let's jump in. Speaking of the markets, and let's take a look at what's happening. We're going to start with the Spider Index Trust here. And, last week I drew some technicals on here. I drew this little ABC pattern, and I want to zoom in on it. I was forecasting where price might go, and I drew this line actually on Wednesday of last week, and that would have been this bar right here. And look what happened here. We are right up to literally that point that I drew, and now I'm anticipating possibly a little reversal. Let me clean up this chart just a little bit. I'll remove those Fibonacci extensions or retracements that I had on there. You can barely see today's candle. All right, it's this little bitty thing right here. Okay, that is up against my short-term moving average. That could play out. Now, the horizontal green line that is a little hard to see here, but it's right up, dissects here. It is up, look at this, against some significant area of resistance back here, of price resistance. This would not be a bad place to see this reverse. Now, it could just continue to move higher and break higher, but I found it really ironic that the talking heads on business news this morning were all kind of almost giddy that the markets were up. They're up 30 basis points. I mean, it just that's exactly what the spider is up now, 30 basis points. Not a big deal. And I see this as a potential inflection point. We could move higher. We could move lower. We'll see. But I think this, what we call an ABC pattern, may play out, and we get a little bit of a move downward. But we will see. Moving on to the NASDAQ and the Qs, same situation here. In fact, let me clean up the chart a little bit. All right, I was doing some analysis on there, but you'll notice here we're right up against that short-term moving average once again. What's that short-term moving average? It seems to be magic. It's the 21 period moving average. That's right, a 21 period moving average. And markets and stocks and ETFs and indexes really pay attention to this at times. And you can see today is no exception. Came right up to it. We've paused here. And this would be very similar, this ABC pattern, possibly to the downside. So we're up at some significant resistance here on the NASDAQ, on the Qs, and it's really going to take a week like this with all these names coming out this week, which we'll take a look at in a moment. We will see what it takes to get this market to move higher and burst out to some significant new highs if we do that. Moving on to the Russell and the IWM, it's the leader today. It's up 87 basis points today. It's also meeting some resistance here. Look at that, short-term moving average, also price, okay? If you Look over here, we have some areas of resistance. So here is some previous, this previous low here. And notice the horizontal green line here. We're right up at that, which was support, is now resistance. Okay. And then all this activity over here. So this could be an inflection point. We'll see. This is really going to be an earnings driven type of week. So we'll see how things play out. So far, earnings have been pretty good. Let's move on to USO and crude oil. We're down a little bit today. What USO is doing is really forming a little bit of chop, sideways chop. You know, it got up here around this 80, 82 half level, and it has just stopped. Now, that's actually good news. When we got up to the most recent highs back here, I thought that this would be an easy no-brainer to go to 100. Okay. But we started forming this little flag pattern here, and all of a sudden we gap down. And then look what we're doing. We're just kind of trading in a choppy trade sideways right around this $80 level. So this could be interesting to see if we do get a sell-off in crude, what happens with production or what happens with refining or any of the process. We'll see. But we're headed towards the summer driving season, and that's typically when we see a hike in gas prices. You know, they are loosely tied to crude oil, not penny for penny by any means, but they are somewhat tied to that, and we'll see what happens on that front. Moving on to the metals, we'll take a look at gold and silver. First of all, gold, we dropped down last week. Look where we dropped down to, the short-term moving average. That's the 21 period moving average. And we dropped right down to it, and we're trickling right back up it now once again. Probably, if this little trend continues, we will fill this gap that we saw here and possibly move back up above 220 on gold. Silver's doing something the same. It's only up 26 basis points today, but moving dead sideways. Okay. Came right down to that short term moving average and now moving sideways here at right at $25. Like to see this possibly rally a little bit and cover this gap. It may or may not. There's gaps down here that haven't filled, and you just never know. If you've heard that saying, "Gaps always fill," well, you know, they may do so, but you just don't know when. It could take a month. It could take a year. It could take several years. Okay, so that's something to be aware of. But right now, we're just trading sideways on silver. Moving on to the exciting sector right now, which is hard for me to believe, is the bonds. TLT is rallying off the lows that it set last week. I've had this downward pointing arrow for quite a while, and I thought really last week we were going to continue this downward move, but now rates are easing. We're coming off of the highs. As you can clearly see, we're starting to just trade sideways right here at this $88, $89 level. And that's going to hold steady. Now, TLT, remember, that's the long end of the curve. That's the iShares 20-year plus Treasury bond ETF. If we look at the short end of the curve, that's SHY. And notice here the difference. Now, this is trickling higher. After its low that it set back on April 10th, this has been slowly drifting higher. And this is what I've been talking about. They're trying to flatten that inverted yield curve. So short-term rates come down faster than the long-term rates go up. They're trying to get that parity and then, you know, reverse the inversion that exists. But look where we are once again, up against the short-term moving average, the 21 period moving average, and this could be resistance, and we could see a reversal here. And if not, then we'll see the SHY continue to raise higher, which means short-term interest rates would be dropping a little bit. All right, let's go ahead and take a look at that inverted yield curve, because there's something interesting that I wanted to note. You know, on this chart, And excuse my squiggly lines. I had to draw it by hand with a mouse. All right. But notice that there's a trend that is repeating. We have these, so you see these rises in the inversion, and meaning where long-term rates now are moving possibly higher and short-term rates moving lower. That's when this inversion starts moving higher, but then it accelerates. Okay, and you can see here back in October, probably August to September of 23, so last year, we accelerated that that collapse in the curve, as they say. Now look at, once again, we made a higher low back in January. Okay, higher low, that's actually good. All right, but then we're doing the same thing. So we're moving higher, and then all of a sudden here in early April that accelerated. Okay, where short-term rates were really holding and long-term rates were going up. Well, what's that going to tell us? Well, we haven't made a new high yet, meaning we're not getting back up to that possibly zero level where normal rate curve would occur. What is the normal rate curve? Well, that's where if short-term interest rates are at 4%, then 10-year rates would be at maybe 5%. And the theory there is that if you're going to tie up your money longer, you get a higher interest rate. So 30-year mortgage rates might be at 5.75 or something like that, right? So, but that hasn't been the case. We've had short-term interest rates now very high for quite a while. And that's why we've been paying so much attention to this inverted yield curve, because that's always been a precursor to recession. Okay. And that chapter of this story has not been written yet, but we'll keep an eye on it for sure. Speaking of 30-year rates, let's take a look at mortgage rates here real quick. We're bumping our head up against that 7.5. The blue line represents the daily rate. That's the Mortgage News daily rate. Okay, the gold and the gray are weekly numbers. Okay, and you'll always see those trailing. But interesting that we've now bumped our head twice up against that 7.5 level, and we're slightly off of it. So we're 7.38 or 7.32, I think, is what I saw, and holding there. So that's good for mortgage rates as people continue to get used to this version of low rates. And yes, this is closer to average than what we have been seeing. Okay, and that's what we had, those 3%, 3.5%, maybe even in the twos. That was artificially produced. Okay, and that artificial production is no longer in place. And now we're seeing these higher rates, even though on the scale of things, I think higher rates are more in the double digit framework, which we had back in the 70s. Okay. Mortgage rates were, double digits, 12, 13, 14% for mortgages. Okay. And we're nowhere near that. Okay. We're upwards of, 7. And for new homes, builders are buying down these rates, putting people back down in the 6s. So these are still low rates on a relative term. So that's what's been going on there. So, we talked about earnings earlier. Let's move in and really transition to this topic. Earnings are, boy, there is more names than you can throw a stick at this week. I mean, after the close today, we have Logitech and Everest and Chegg, and those aren't the big names, but okay, how about some big names? Tomorrow morning, you got PayPal and Coca-Cola, Eli Lilly, McDonald's, 3M. Okay, aftermarket close tomorrow. You have Amazon, you have Stryker, Prudential Securities, a bunch of others tomorrow afternoon, and just through the week. You have eBay and Pfizer and Zillow, and Thursday you have Coinbase, Cigna, Amgen. I mean, just the big names. And then Friday we close out with Hershey and the SIBO, Chicago Board of Options Exchange, and some others. So it's just a busy week. Over 950 companies declaring earnings just this week. And that doesn't include the economic news that's going to come out. Okay. So Wednesday, we have manufacturing. Well, tomorrow, let's not bury consumer confidence, which comes out tomorrow morning. Okay. At 9 a.m. sharp. Well, excuse me, 10 a.m. sharp Eastern time. All right. And then we have Wednesday, we have manufacturing PMI. And then, the Fed interest rate decision at 2 p.m. Eastern time. What's it going to be? Well, the 100% consensus is nothing. All right. And then Friday, we have unemployment on Friday morning. So through all these earnings, boy, there is lots of opportunity here. Lots of opportunity for trade, lots of opportunity abound. So where do we direct our attention? Well, just like we did with Tesla, looking for a stock to break out, we have a company that's embedded in that list that is a historic mover. I mean, this thing typically moves a lot for us. Now, they can sometimes not. Okay, it's earnings after all, but typically this has always been a big mover, and that would be Carvana. Okay, now Carvana comes out with their earnings announcement on Wednesday after market close. And what I was doing here is what I call a baby strangle. Okay. Now, a straddle is the same strike price with the same expiration. Okay. Strangle is different strike prices with same expiration, even if it's $1 off. Okay. Even if you have $1 wide strangle, that is not a straddle. It's a strangle because they're two different strike prices. All right. And so that's what we're doing here is a little strangle, and we're just looking for the stock to move. It's been a mover. It's done very well for us historically. And we are looking at Carvana, and the symbol for that is CVNA. That's Charlie Victor November Alpha is the symbol for Carvana. And again, Wednesday, aftermarket close, we get that excitement. But man, there's a bunch of others, PayPal, and they're expecting big numbers from Amazon. So, and Amazon's tomorrow aftermarket close. So, lots going on this week, but there's your trade, and we'll see next week how we do with Carvana and what else has been happening in the market. So, thanks for joining us today. Hope you enjoyed this session. Have a great trading week, and we will see you again next Monday. Everyone, take care.